for joining me today. My name is Briant Sikorski, and I'm an independent wealth advisor with Stratos Wealth Partners. I help clients work toward achieving their financial goals. I will provide planning services, including financial, insurance, retirement income, and education savings. I'll provide asset and income protection, such as life, disability, long-term care insurance, management, including both brokerage and fees, advisory, investment management accounts consisting of stocks, bonds, mutual and exchange-traded funds, and finally, tax-deferred retirement income strategies for individuals like annuities, including fixed, indexed, and variable, or perhaps a business-sponsored or company-sponsored retirement plans like 401ks. Today, we're going to be talking about Social Security and what role it will play in our retirement. So I would ask, what's your retirement income picture? For each of you, it's going to be different. Some of you may still have a pension from your employer or from a job years ago. Many of you likely have a 401k or maybe your own IRA. And some of you may keep on working or have rental property that will provide additional income. Now, all of these sources factor into your retirement income and what to take and when to take it. So today, we're going to take a little closer look at this Social Security component. So our idea is to determine with a discussion of how Social Security benefits are calculated. We'll discuss the options that may be available for anyone who has ever been married. And with our favorite topic, the role of taxes and your retirement plan. So, and talk about how Social Security benefits are calculated in the first place. So you are eligible for Social Security benefits. Worked for 40 quarters. In 2018, you qualify for a quarter of work if you've earned income of at least $1,320. The legislation uses something called your full retirement age, or FRA, as a basis for calculating Social Security benefits. Start at age 66 for anyone retiring now and gradually increases to 67 for those born in 1960 or later. For anyone 62 this year, your full retirement age is 66 years and 4 months. Look at this chart to find your full retirement age. For simplicity's sake, in this presentation, we're going to use 66 as our example of full retirement age. This is because age 66 is the full retirement age for anyone retiring from now through 2020. Age in this case, age 66, makes it a lot easier to understand Social Security. Social Security benefits before age 66, they will be reduced. If on the other hand you apply for benefits at age 66 or thereafter, their growth is going to be maximized. So, that your full retirement age is age 66. You can see that if you file early, your benefits will be permanently reduced. See this for age 62, it's about 25% less. And if you take benefits after age 66, they grow about 8% per year, such that by age 70, you've got an increase of 32% over what you would have received at age 66. In addition to any annual cost of living adjustments. benefit is available at age 70, so you will not receive any benefit by waiting anytime after age 70. Oh, geez, how does that? What happens there? So you can see here that there is an earnings limit that applies to Social Security benefits, including retirement, spousal, survivor, and divorce. And the earnings limit looks at wages only. Earned income such as pensions, IRAs, rental income do not cause Social Security benefits to be withheld. So through the year before turning age 66, if you earn more than $17,040, $1 of your benefit will be withheld for every $2 of earnings above this limit. In the of turning age 66, the earnings limit is $45,360, and $1 of benefits will be withheld for every $3 of earnings above the limit. However, here that once you're in the month of turning age 66, there are no restrictions on the amount that you can earn impact to your benefit. For married couples and divorcees, Social has a spousal benefit. Even if you never worked, you're eligible to receive up to 50% of your spouse's in this age 66 benefit. You receive a reduced spousal benefit at age 62 equal to 35% of your spouse's age 66 benefit. In order to receive a spousal benefit, your spouse must have applied for his or her retirement benefit. Some other things to know are only one spouse at a time can receive a spousal benefit. Both work, you do receive the greater of your personal or spousal benefit. The spousal is based on your spouse's age 66 benefits regardless of when he or she claims Social Security. No, benefits do not grow after age 66. Even though the retirement benefit grows past age 66, the spousal benefit is maxed out at age 66. For divorce, spousal benefit is calculated the same way. And we'll get to the divorce qualifications at the end of this section. So here's a study. We look at Jack and Diane. I love it. But we see that spousal benefits are available even if you didn't work. The requirement must be married to the current spouse at least 1 year. Your spouse must have applied for his or her retirement benefit. If both spouses work, generally you'll receive the greater of your retirement or your spousal benefit, and only one can receive benefit at any given time. Diane, Jack is the higher earner. Diane's retirement benefits are less than the spousal benefits, meaning that her benefits are less than 50% of what Jack's are. Jack's annual Social Security benefits at age 62 are $7,500. At age 66, $10,000. And at age 70, $13,200. These are his annual benefits. Number was just kind of taken 10,000 to be kind of easy, as opposed to representing any specific benefit. So, James' retirement benefit at age 66. Claim spousal benefits at age 66. Well, as you see here, Jack's entitled to $10,000 a year. Diane's spousal benefit is equal to 50% of Jack's benefit at age 66. Now, if claims spousal benefit while she is age 62, seen instead of $5,000 per year, her benefit reduces to $3,500. His retirement benefit before age 70, what's the spousal benefit for Diane? So yeah, we'll receive 50% of Jack's age 66 benefit, or $1,000 if she claims at 66. If she claimed at 62, she will receive 35% less, or only $3,500. Got this right, and how many of you thought this would be higher? So the spousal benefit is always based on the other spouse's age 66 benefit, of when the spouse claimed Social Security. Even benefit increased after age 70, the social benefit stays the same. Now it claims at age 62 and claims the spousal at age 66, will it be 50% of Jack's $500 or 50% of $10,000, which is Jack's age 66 benefit? What about spousal benefit 62? The spousal benefit is always based on the other spouse's age 66 benefit. So, I'm not sure if any of you have ever heard of this strategy known as a restricted application. Were you born before January 1st, 1954? Then you may be eligible for a strategy called restricted application. You may be eligible to start with the spousal benefit and switch to your own retirement benefit. There are 3 requirements. You must be born on or after January 1st of 1954. You apply at age 66 or older, and your spouse must be receiving their retirement benefit. All 3 requirements, then you will receive your benefit or your spousal benefit. So it's important to discuss this option with advisor or CPA, analyze how this strategy fits in with your current plans for retirement income. So let's take a look at a case study that illustrates this restricted application. So is I think that we've got an example here with Al and Abby. He, age 66, born in 1952, is the highest earner. He to apply at age 66 or older. She is age 62, born in 1956, and retired. Before January 1st, 1954, he is eligible for restricted application. Requirements for restricted application are birth before January 1 of 1954, age 66 or older when applies, and if is receiving her retirement benefit. Decides to apply her Social Security benefit, and since Al is age 66 and born before January 1st, he is eligible for restricted application. He elects to, quote, restrict his application to spousal benefits. This will allow Al to start with the spousal benefit. If he wants, he can continue to work while receiving the spousal benefit. At any time between age 66 and 70, Al can switch to his retirement benefit. After the way, Abby receives his benefit because it is the higher benefit. So if you're this strategy and you're interested, you may want to talk to the Social Security Administration, your financial advisor, and your CPA. Are also very important. So your spouse for their retirement benefit, then you are limited to receiving the greater of your retirement or your spousal retirement benefit. You may start with your retirement benefit and up to spouse benefit if higher when spouse applies. What about benefits? As the earner passes away, Social Security can provide benefits to the surviving spouse. The surviving spouse would receive up to 100% of the deceased benefit if the living spouse is full retirement age or older when he or she claims a survivor benefit. Even if the surviving spouse is receiving a reduced retirement or spousal benefit, you can receive up to 100% of the deceased's benefit if you are full retirement age or older when you apply for the survivor's benefit. This is eligible for a reduced survivor benefit as early as age 60, 50 if the surviving spouse is disabled. The benefit is 71.5% of the deceased benefit. The amount ever received is dependent on when the highest earner claims his or her retirement benefits. The higher the deceased retirement benefits, the higher the survivor benefits. What impact or how does the deceased claiming decision impact the survivor's benefit? Let's look at a hypothetical example here. 17, the average male would receive $20,000 in annual Social Security retirement benefits if he claimed at age 66. The survivor benefit if he took age 62 versus age 70 is almost $10,000 per year. So could $10,000 a year make a difference for some of you? Earner in the couple, Social Security retirement benefit is no longer your benefit, it's a couple's benefit. This is because the highest earner's benefit becomes a survivor's benefit as highest earner passes away. If your marriage lasted 10 years or longer, you may qualify for benefits off of your ex-spouse. Receive a spousal benefit off your ex-spouse's record if he or he has remarried. You must be unmarried, and you or your former spouse must be age 62 or older, or your ex-spouse, must be entitled to Social Security benefits or disability benefits. That the that is being claimed against can remarry, but the person that is trying to make the claim must be unmarried. And in fact, there can be multiple individuals divorced individuals filed against your benefits. Okay, Johnny Carson. Johnny Carson had 3 ex-wives whom were claims against claims for their spousal benefit, which equal to 1/2 of his benefits at the same time. All three of them got the same amount, and it did not negatively impact John Carson's benefit at all. Remarriage. Well, if you remarry before the age of 60, you will forfeit your spousal benefit. You will also forfeit your survivor benefit. If you remarry after age 60, you do forfeit the spousal benefit, but you do keep the survivor benefit. This is our favorite topic. Age, one, start taking Social Security, your benefit may be taxable if income exceeds $25,000 if you are single, or $32,000 if you are married and filing jointly. So your Social Security benefits could be added to your income and thus become taxable. The IRS uses something called combined income. Combined is your adjusted gross income, lines 1 through 37 of your Form 1040, exact income, plus only 1/2 of your Social Security benefits. The higher your Social Security benefits, the less chance that your Social Security benefits may be included in your combined income. One to be aware of is that some items are not included in combined income. These may include Roth IRA and Roth 401k, qualified charitable distributions, taxable portions of pensions and annuities, inheritance and gifts, life insurance proceeds, and health savings account withdrawals for qualified medical expenses. The Roth IRA. Of a Roth IRA, this changes the discussion from do I take my Roth or traditional IRA first to what right amount to withdraw from my Roth IRA to minimize my taxes in retirement. If you're working access to a Roth 401k or a Roth 403b, you may want to consider increasing the portion of your contributions. Having may give you more flexibility to control your taxes in retirement. You can see Social Security claiming strategies can be complex and have many considerations. Work advisor and tax professional may help put it all into some perspective. So discuss with your advisor as you contemplate when to take Social Security. How long will you work? What will be your withdrawal rate? And what is your life expectancy? I who had intended to wait until age 70 was diagnosed with a type of cancer that had a high propensity for remission, and he was age 60. Decided to start taking benefits at age 62 instead of waiting until age 70 because his family had longevity and he might not. These can be very personalized decisions that you need to make. So we'll say thank you very much for joining me, Briant Sikorski with Stratos Wealth Partners. You can access this and other videos that I have, other webinars at my website. You can go to my website at www.briantsikorski.com. In the upper right corner, click on my YouTube icon, and it will take you to my YouTube channel where you can watch this and other videos as many times as you'd like. Click on the subscribe button there on YouTube, and that way anytime I have a new video, you'll be notified and you can take part. So again, have a great rest of your day.